From the Lineweaver Wealth Watch Center, this is the Financial Quarterback.
I'm Jim Lineweaver, your financial quarterback since 1993. As a business owner, you're a key driver of the American economy. Your hard work, long hours, and sacrifices have built a business that supports not only just you, but also your family, but also your employees, vendors, and also the community. You're always looking ahead, planning for the future, and a solid succession plan is crucial for the longevity of your business. So today I'm here to talk about the importance of succession planning. As a financial advisor and a certified financial planning professional, I know how crucial it is to plan for the future of your business. We're going to share some important tips here, and at the end of the segment, I'll share how you can access our exclusive white paper with even more information and tips for business owners. Succession planning can cover a lot of ground, including financial, tax, legal, and insurance topics. It's essential to work with a certified financial planning professional who can coordinate all of your needs and collaborate with advisors that you trust. So let's walk through some of the options that can help you develop a succession plan. One option is selling the business to a partner or family. This can be beneficial because it allows future involvement with the business and keeps it within trusted hands. However, it's important to consider if they have the necessary skills to run the business and how it affects your non-family employees. Family limited partnerships allow business owners to create two types of ownership shares, general and limited. So by using a gifting strategy, senior family members can transfer assets to children and grandchildren, minimizing taxes. This can also provide asset protection and shift income to family members in lower tax brackets. Another option is installment notes, where the buyer makes payments over time to acquire the business. This can be positive because you realize capital gains over time, and it may be more affordable for a lot of buyers. However, it's crucial to mitigate risk regarding future payments and ensure you have adequate resources if the buyer defaults. Another possibility is the option of a third-party financing. In this scenario, the buyer secures financing, usually through a bank loan. You'll typically receive most of the purchase price up front in a lump sum, reducing the risk of any defaults on future payments. However, obtaining funding can be challenging depending on the buyer's circumstances. There are also intentionally defective irrevocable trusts that can be created to sell a family business for optimal estate planning, but it is defective for income tax purposes. This means the trust isn't recognized by the IRS as a separate taxable entity, allowing assets to be transferred to beneficiaries free of gift as well as estate taxes. There are many more methods to consider, like employee stock ownership plans called an ESOP, deferred compensation plans, gifts, buy-sell agreements, and many more. So it's important to work with a knowledgeable team of professionals led by a financial quarterback who can coordinate all of your financial needs and ensure a smooth transition. So if you want to learn more, we have a comprehensive white paper that explores these topics and more on our website. So you can get a copy by simply joining us at lineweaver.net or calling us for a no-cost, no-obligation meeting to learn more. Here's Fox News Sunday.